Greetings, Shaun Pruitt here, Zacks equity strategist. And today I'm going to be discussing if it's time to buy, hold, or take profits in Sterling infrastructure stock at all-time highs. So if you're not familiar with Sterling infrastructure stock, ticker symbol STRL, it's a stock that gained a lot of notoriety over the last few years amid President Joe Biden's historic infrastructure bill, $1.2 trillion infrastructure bill. So it gave immense amount of federal spending on roads, bridges, public transit, and energy infrastructure, which catapulted Sterling infrastructure stock. So it's one of the top performers in the industrial product sector. Sterling infrastructure stock has continued to hit new all-time highs over the past trading sessions. And while several positive catalysts are lifting Sterling infrastructure stock, it's certainly a worthy topic of whether it's time to buy, hold, or take profits in STRL at over $240 a share. So notably, STRL has spiked nearly 100% over the last year, and it's up more than 40% year to date, and is now sitting on nearly 2,400% gains in the last 5 years. So it's up more than 2,400% in the last 5 years. And here you can see the price consensus and EPS surprise chart all the way up to over $240. So first we'll discuss the CEC acquisition and the AI boom, how Sterling infrastructure is benefiting from the AI boom. So focusing its concentration outside of traditional physical infrastructure projects, Sterling Infrastructure announced in June that it will be acquiring CEC Facilities Group and expanding its reach into mission critical electrical contracting for semiconductors and other data center projects. So pending regulatory approval, the $505 million acquisition of CEC will close during Q3 and is expected to add nearly $400 million to Sterling Infrastructure top line this year alone, and over $50 million in EBITDA. So benefiting from the AI boom and making the CEC acquisition extremely lucrative, Sterling Infrastructure has also secured several AI-related projects, including one with a reward of up to $100 million for a massive data center development in the southeastern United States. And to that point, one thing that's making Sterling Infrastructure so successful is its high margin projects and strong backlog. So amplifying the surge in Sterling infrastructure stock has been the company's focus on high margin projects such as its AI endeavors and the Hyundai Engineering America facility in Georgia, which is aimed at boosting EV and hybrid car production. So avoiding low margin work, Sterling Infrastructure is known for its on-time deliveries, prioritizing complex projects where speed and execution are critical to its clients' needs. So interestingly enough, Sterling Infrastructure was chosen as my bull of the day in early April. I think that was around April 2nd, after securing interstate roadway projects with the Utah and Colorado Departments of Transportation. And since then, STRL has soared over 100%, as you can see here. And it's added a major highway project in Houston as well. So Sterling Infrastructure's total backlog currently stands at around $2 billion, which adds a solid cushion for future revenue. And of course, we'll track Sterling Infrastructure's outlook. So following a record year last year, Sterling Infrastructure's total sales are expected to dip 1% in fiscal 2025 to around $2.09 billion. But they're expected to rebound in fiscal year 26 and rise about 8% to a new peak of $2.26 billion. So there you can see that revenue chart with it peaking over $2 billion last year. So more intriguing, Sterling Infrastructure's bottom line is slated to expand 41% in fiscal year 25 to new peaks of $8.61 per share from record EPS of $6.10 last year. And fiscal year 26 EPS is projected to spike another 10% to $9.48. So there you can see that earnings outlook, that EPS outlook for fiscal year 25 and fiscal year 26. So 41% growth this year, and another 10% growth next year is in the forecast. So of course, we'll need to monitor Sterling Infrastructure's PE valuation at current levels, which is probably the most critical part to deciding whether it's time to buy, hold, or take profits in STRL. So at current levels, Sterling Infrastructure stock trades at 28.1 times forward earnings. And this is a slight premium to the benchmark S&P 500's 24.2 times forward earnings multiple, and its Zacks Engineering R&D Services industry average of 22.7 times. And some noteworthy peers in that space are ACOM, ticker symbol ACM, and Fluor Corporation, ticker symbol FLR. So not at a stretch premium to the benchmark ARD's industry average, which is makes STRL still kind of intriguing at current levels. So Lastly, just some conclusions or strategic thoughts here going forward. So after such an extensive rally, Sterling Infrastructure stock lands a Zacks rank number 3 hold at the moment. So undoubtedly, Sterling Infrastructure has remained a staple in advancing America's infrastructure and is still worth holding in the portfolio, although it's tempting to take profits with STRL at all-time highs. However, it's noteworthy that analysts have become very bullish following the announcement of the CEC acquisition, and Sterling Infrastructure stock may eventually serve as a prime buy the dip target, which previously led to STRL being my selection for the bull of the day back in April. Again, I'm Zacks equity strategist Shaun Pruitt. I hope you enjoyed this content. For more, please feel free to visit zacks.com/promo.